Southwest Florida is officially the #1 emerging market in the US, but that comes with potentially good and bad news for both buyers and sellers alike. Plus, the January market data is in, so we'll spend some time looking at what those monthly trends are suggesting moving forward. And there has also been some significant changes in interest rates again. So stay tuned for what to make of this week's market update starting right now. Thanks for joining me today. I'm Rick Harrison with MVP Realty in Southwest Florida, and today we'll be looking at our 7-day data update as well as January's market data and trends to see how the beginning of the year is shaping up. Then we'll look at some significant changes in the interest rates this week ahead of the Fed's March rate hikes, and then we'll dive into the local news stories that will reveal good and bad news for both buyers and sellers alike. But first, if you haven't already done so, please hit that thumbs up button and help me get this information out to more people so they know what's going on in this market and can make better decisions when it comes to buying, selling, and investing in Southwest Florida. And if you find this information helpful, please consider sharing it and subscribing to keep yourself and others up to date on what's going on in the area. With that out of the way, let's dive on into this week's updates. All right, so for this week's 7-day market update, we'll start with our comparisons as of the last 7 days. New listings, we went from 637 last week to 694 this week. That's up 9%, so that's always welcome to be going up in our new listings on the market. The unfortunate news is that solds are also up and by quite a bit more. So we went from 651 solds last week to 795 this week. That's up 22%, so we have a difference there of 13%. Again, we're negative. We're going into, we're declining in the amount of inventory on over this past week again. And in addition to that, we have the pendings going from 1281 last week to 1318 this week. That's up 3%. So total, we have 25% up of homes going off the market versus the 9% new listings coming on the market. So again, there we're losing inventory this week as well. Total inventory breakdown, look at the single family homes. We went from 1876 last week to 1868 this week. That's only a loss of 8. And then condos, which includes everything else, townhomes, high rises, condos, manufactured homes, went from 825 last week to 824 this week. That's a loss of 1. So we have a net loss of 9 properties over the past week on the market right now. Moving on to multifamilies, last week we were at 86. We are down 12 this week to 74. So that again has been a trend. We've been mainly hovering around the 70 or so range at a time. For a period of time, we were hovering right around 60, mid 60s for multifamily properties. But we're back down to the low 70s, which has just been a trend overall. Rentals, we are up 2 this week from 3689 last week to 3691 this week. So again, with us seeing more properties being purchased by major investment companies like Blackstone, I'm sure we're going to be seeing more and more rentals coming on the market, especially as our market is heating up even more. More people are moving down here. Less inventory means more people are going to be renting. More people are going to start putting up those second and vacation homes for rent. All right, we're moving on to the data for January. So we're going to take a look at the charts. As you can see, we're going to go through the main categories of charts that we really want to look at to see where the trend lines are heading. Average sale price, as you can see from this one, we did hit a maximum just a month ago at the average sale price. And now this past month, January, we're seeing that has declined slightly. So it is heading down, which means that people just aren't willing to keep paying more and more for money. We're hitting a peak, which means prices are starting to level off. And I'm sure you're going to see competition start to level off too with that. Homes for sale, as you can see, we have a steep decline over the last month from January down to, from December down to January. You can see a steep decline. We are well below the 5,000 property mark. We're almost at the 3,000 mark, just a little over 3,000 properties on the market. And you can see that from the data we just went over with the breakdown. Also, closed sales, you can see that that went down drastically over the last month from 3,500. We're down almost to 2,500 closed sales in January versus December. Again, that goes just hand in hand with the fact that there's a very low amount of inventory, and the prices have increased so much. People have been starting to get priced out of the market, and this chart is showing those trends right now. So if these types of trends do continue, I think we're going to start seeing a much larger shift in the market, not necessarily towards a buyer's market, but we're going to be seeing it level off quite a bit. In which case, when the Fed does raise the rates in March, you probably will start to see it go the other way a bit and turn more to a buyer's market. Shows depending. This chart shows that it went up, you know, a very steep amount and significantly, but it actually only went up a little bit over 1.5 extra showings before a property went pending. So we went from 14 last month, on average 14 shows to every pending property. Now we're up to 15.5 shows to every pending property. So that did go up a little bit, even though the chart makes it look a lot more dramatic. Days on the market, we did see that decline as well. So it's taking less days. We went from about 25 down to 24, 23 range of days on market on average for each property. That includes all properties. That includes expired listings, and extended listings, things like that. So it's across the board. Days on market is just explaining how many days it took before the average home sold, to be on the market. With it declining, it means that it just goes hand in hand with all the rest of the data. Inventory has been declining, therefore the homes that are getting put on the market are getting taken up and bought pretty quick. So that's why we're going to see less less days on market for the average property. Moving on to interest rates. As of today, NerdWallet had the interest rate going from 3.514 last week to 3.615 this week. That's up just about 10 basis points there. And then Bank Rate Average had it going from 3.74% to 3.95% this week. That's up 21 basis points, and that's a significant amount because that means that bank rate has us almost at that 4% average interest rate, which, if you remember about 2 months ago, you would have seen that the interest rate was hovering right around 3%. We've almost gone up a full 1% interest rate according to bank rate. And that is actually before we even see the federal rate hikes, which, like I said before, don't always necessarily mean that mortgage rates are going to increase, but there's a high chance that they will, just because they have been so low for so long. And I think that's going to have a huge effect on the mortgage industry just overall. All right, now let's get into the 5-minute local data. We have 4 stories this week. I'm not going to be doing the macro data this week, just because I have a lot of information to get through and I don't want to keep these videos too long. So we're going to tackle 4 stories that are local and apply to our housing market specifically. And they do show some interesting trends, and depending on how you look at it, some scary trends if they do continue the way they have been. So first, Southwest Florida tops national 2021 list and number 1 in the state on the highest rising home prices. So Lee County was actually number 3, and Collier County is number 4. Collier is Naples. So Lee County includes Cape Coral, Lehigh Acres, Fort Myers, Bonita, Estero area. And then Collier includes Naples, Marco Island, and that whole region. So Lee County finished number 3 in America with 32% jump in median prices among the largest counties of 750,000 or more residents. And then Collier nabbed 4th with 31% increase. Now, if you take a look at this, the typical single-family home, according to Fred data, went from in January 2021 from $315,000 a year on average up to $408,000 currently. So that's almost a $100,000 price increase in just 1 year's time, which is quite significant and is a reason why there are so many investors and buyers coming down here. But the bigger reason why investors are coming down is because of the migration data is showing that Southwest Florida is one of the hottest spots right now for people to migrate to. and it also shows signs of a very strong economy and growth here. Um, in addition to that, though, with the number of people coming down and migrating to it, as well as the home prices increasing and becoming more affordable for buyers, less affordable for buyers as we go, it's attracting a lot of investors. One of one of which we've spoken about many times before, Blackstone Group, not to be confused with BlackRock, which is also another large company, investment company. But Blackstone Group is one of the globe's biggest commercial real estate owners and private landlords, and it's a player in half of the rental properties in affordable housing. So down here, they've made their mark. They've been picking up a bunch of properties lately. Another one has been picked up by Minnesota's Dominion, which is probably going to become by 2025, one of the country's preeminent private developers, owners, and property managers of affordable housing. So the cost of these changes in our market will be higher rental rates for individuals and families. That's something we've been talking about. Potential caps being put on rental rates. If you're an investor, that's something you need to be looking out for. On the other end, though, if you're a buyer or a seller, if you're selling soon, or if you plan on waiting, if you do wait, you're probably going to be looking at rental rates rising. So if you can't find something right away, you're more likely going to be paying higher rental rates. And then for those of you buying or moving down here soon, before you move down, it's something that you really need to know. Obviously, our inventory is super low, but rental rates have been increasing quite significantly, in some areas as much as 30%. So those hikes will probably continue as less inventory is on the market and more people are moving down here. Just to put it in perspective, though, for Blackstone Group, who they are, how big they are, from its perch at the former Sears Tower, previously Earth's tallest building, the behemoth looks over a lot of its $881 billion in assets. So that represents a 42% increase in the past year. So they've bought almost half of their assets in the past year in real estate. So that's just to put in perspective how much investors are investing right now. Other statistics show that 1 in every 4 buyers of single-family homes and multifamily homes right now obviously multifamily, but of single-family homes right now is an investor looking at a secondary or investment property versus the primary home buyer. So a quarter of the homes being bought up right now are being bought by investments instead of primary housing, which is causing a huge issue for people who are looking for primary homes right now. With all of this data, though, we do have a study right now, a national study that's conducted by two economists, an economist and a university teacher at Florida International University School of Real Estate. They've been conducting a study on overvalued markets in the United States. They've done a top 25, and the news here is that homes are overvalued in Southwest Florida by approximately 35%. So how did they do this? Well, they compared the current average prices to historical ones and then expressed it by a percentage. So the higher the percentage increase, the more overvalued the market was. As you can see on this slide, in the top 25, 4 of them were in Florida alone. Tampa hitting the top of the list in Florida at 37.96%, Lakeland at 37.86%, Fort Myers to Naples, which is our Southwest Florida area, 34.64%, and then Melbourne at 34%. Fort Myers and Naples, the average home price rose to $337, $891 as an example. The previous graph that we saw on Fred, that was just Lee County alone, but this is factoring in all of Southwest Florida, so that's why it's at 337. And the expected price should have been around $250,000. So that's almost, as we have said, almost $100,000 increase, just under $90,000 increase. So they're saying that it's overvalued by 35%. What could that mean? Well, it could mean that prices, might be decreasing in the near future. That's what they predicted in the rest of the article. There is a link in the description if you'd like to read that article and see what else they said about the future of the housing market. But They did suggest that this shows that the markets could be shifting to really flattening out or even decreasing in home values in the near future. And as you can see on the slide, I did put this is not financial advice. Do not make your decisions based on this. Go to the site, read the article yourself, make your best judgments from that. This is just data. So you are in the know of what's going on and what people are saying and where people's thoughts lie. And then also, what's America's number one emerging housing market? Well, you guessed it. It's Southwest Florida. Realtor.com uncovered that there was a 17% increase in December searches, which actually comes out to 24 million views, the highest ever reported from the portal in the Burr market, which is Bonita Estero area. And then even though that is the case, it also revealed that closed sales were down 24% from a year ago for the Naples board, and a 36% slide for Bonita Estero. So even though interest has increased quite drastically, the actual number of closed sales, as we saw in the charts, has decreased significantly. And that's because inventory is low and homes are getting more expensive. So that wraps up this week's market update, and I hope you enjoyed this information. Thanks for watching, and if you enjoyed this video, please hit that thumbs up button to let me know. And don't forget to register on my site to get access to loads of exclusive tools, data, and content like foreclosure and open house lists, buyer and seller guides, calculators, and access to our Southwest Florida MLS. If you have any questions, please don't hesitate to give me a call or send me a text at 239-310-5478. And if you prefer email, you can send one to rick@swflrelocationteam.com. Thanks again for watching to the end, and I hope to see you next week.